Here today. My name's John deRoulet. I'm the head of revenue management education at Wheelhouse. If you haven't seen me on either our revenue management roundtables or any of the other educational materials we do, I've been with Wheelhouse about 4 years. And prior to that, I was a revenue manager for 10, leading the revenue management at an organization called Stay Alfred, which was a large urban multifamily lease arbitrage operator that had about 3,000 properties in 33 cities. And I built and led that revenue management team. So pleasure to be here. Do you guys want to kind of jump in and introduce yourself and tell me a little bit about how big your portfolio is, where you are, that kind of thing? Scott, you're not on mute. You want to start?
Sure. So I'm Scott Bunce. I'm president of Vacations for You, or in this market, Cabins for You. We have about 600 homes, but it's spread out between Tennessee, North Georgia, and a little bit in the Panhandle. But 2/3 of our inventory are in the Tennessee market.
Awesome. Well, then this is the right conversation for you. Would anyone else like to hop in? Let us know who you are.
My name's Jack. I'm the CEO of Haven Vacation Rentals. So we're also in the Smoky Mountain market. We've got about 250 listings in that market. That's primarily where we're located.
Awesome. Thank you, Jack.
Yeah, a couple more of my team members are in here as well, but I don't think they'll probably ask questions or anything.
Okay.
I can go. My name's Mallory Madewell. I'm part of the ownership and management of Antebellum's Cabin Rentals. We're just in Sevier County. We've got 134 properties and have been in business. This is our 31st year.
Awesome. Welcome. And would anyone else like to hop in? All right. No, then. So first we'll start out with just a little conversation, then I'll hop into some market data. But how do you guys feel like things have been going this year? I have the benefit of talking to folks all over the kind of country, and spring's been kind of mixed for a lot of people. So I'm wondering how you guys feel the market has been in the Great Smoky Mountains.
I'll jump in. We had a very slow January, February, at least compared to the previous year. Started to rebound a little bit in March, and more recently, year on year, it's been better. But we have an owner climate where owners are worried about the economy, and I think they're hyper focused on their pre-bookings for the future, which causes lots of conversation.
Yeah, that makes sense. This is an area that I think has gotten quite a bit of inventory too, like new owners into the area. Is that correct?
Yes, lots of new inventory.
Are those owners between when you're talking to these owners, that probably means there's a lot of different pressures, right? Because obviously people would have bought at a pretty expensive rate. Is that something you're dealing with, Mallory?
Yeah, we were pretty careful about not onboarding too many new homeowners because that was proving difficult. But we definitely have several, and yeah, it's definitely more challenging, which I understand. But we're pretty much experiencing exactly what Scott said.
Yeah. Go ahead, Jack.
I was gonna say I would echo a very similar thing. I think January and February were very similar to what Scott said, and obviously the last month and this month they're doing a bit better. And then the same kind of things for the homeowners. I think we're just trying to be specific when working with them and knowing kind of where they're at and being pretty honest with them when they're getting into a property or coming online with us.
Oh yeah, we've been pretty honest.
Yeah.
There's no sugarcoating going on.
Yeah, definitely.
That's good. You guys are, so far telling me that even though it's maybe a little difficult with the owners, they're a little more realistic. Some of the folks I've been talking to in across the Gulf Coast, their owner situation can be very difficult because of the prices people had bought at, and it's just I'm not going to be able to make you happy kind of thing. You know what I mean?
Mm-hmm.
But we'll see if the market itself has been dropping the same kind of amount. So let me show you some market data, and please feel free to hop in. So first thing here, this is on Wheelhouse's market reports. Just as an FYI, this is a free product, so if you just sign up with Wheelhouse, you can actually access the market reports for any market that we're covering. They're going to be pretty high level, hence why they're probably free. So I'm looking at a pretty large area. We're looking at this whole like kind of Sevierville market. I do have the capability to kind of look at some different slices of that, but in this part of the platform, I'm not going to be able to carve into like a specific area. I'll show you another part where I do that. But it is nice to get an idea of kind of like general trends about what's going on in the market in general. So I'm going to hop over here to this trends tab. And I like to just start on the occupancy situation. So this is adjusted occupancy on the left. And then what I have here, I'll pull off 2026. I have the last 3 years of occupancy by month. And kind of interesting what you guys have said is that kind of at the whole market level, January, February, obviously not a very strong season, but seeing a little bit of attrition there, particularly into February, right? The market's dropped a bit in occupancy. Some of that attrition is still appearing in March. Now, is Easter good for you guys? You usually get a pretty good Easter pickup.
We don't get fully booked by any means, but I mean, it's okay.
It's okay. We can actually just hop into this and look at where Easter was last year. Last year was pretty good. So some of that occupancy, this is interesting to me. The Easter week, so in green is last year, in purple was this year. So obviously Easter isn't in the first week of April this year. There is some strength at that end of the month, but definitely missing a little chunk. And then obviously that Easter is gone. But that Easter kind of did give an extra period of demand, it looked like, that didn't really occur last year. There's something else that happened last year that it looked like you had another date range in the market in general, March 8th through March 16th, that sustained its occupancy through the weekdays. Was that like, do you know what might have caused that? Was it like a spring break, or do you guys get that as a major driver?
Yeah, in our experience, so 2024's Easter was in March, which meant the majority of spring breaks were in March last year.
Mm-hmm.
This year it's a late Easter, so it's kind of spread over March and April, at least for us. I don't know about y'all, Scott and Jack.
Similar for us.
That makes sense. What I'm wondering here is like if enough of this occupancy is just displaced into April, right? Because we've seen a little attrition here in March. 2024, actually, that attrition between 2023 and 2025 is not that much, though. So 2024 had a much bigger kind of like occupancy jump. Question is, how much of that is actually going to shift into April? And, April occupancy is pretty close to 2024 occupancy. So some of that might get made up. And that kind of makes it hard to pull out. Like, obviously, if you're in the Gulf Coast or kind of on the Georgia coast, you're looking and you're saying like, hey, things are probably getting worse because it was just like the occupancy is missing. And it's missing into April too. But for you guys, it might be kind of sustaining. And this is kind of interesting too, because there's a few markets that don't have as much negative trend in spring as we see across the Gulf markets. So we'll kind of see how that shows up. And then obviously we have this kind of early spring stuff. So a little bit of attrition. I do like to check on, right now we're looking at like the whole market, which is why these occupancy values are fairly low. I do like to check the highest performing brackets, which tends to be around the top 15 to 20% of listings in terms of revenue performance, just to see if there's a difference in trend. Sometimes you see that these are actually doing much better. Obviously, you can see that the occupancy levels for these listings is much higher, but similar trend. January kind of staying similar, a little bit of attrition into February, much less attrition into March. So we're really just seeing like potentially just the loss of of Easter here, and I'm wondering if we look into some of the like weekdays and stuff like that, if those actually came in differently, because this difference in occupancy year over year for the top performing properties is pretty minimal. Um, Looks like April's probably going to do better year over year, which it should because Easter's moving. And then there's a slightly different trend here, which it doesn't look like June is quite as booked in relation to May. So that could mean May is more booked. We'll kind of see. Um, so kind of interesting trends here in the sense that there's a little bit of attrition, but you're not under as much pressure as some of the other markets that we see around the Gulf. Um, it's still pretty early in the window, so summer's obviously got to be a big time. How do you guys feel you're pacing for summer right now?
Mm.
I think we're pacing, all right. I would say about where I thought we would. I still think it could be pretty volatile looking forward. And I'm just like, I don't really know, how the market will be affected. I think earlier in the year, especially kind of what Scott said, it looked like it could be worse than we thought. I don't know if it's just a couple bad months. And so I think we've just kind of been playing around with that but I don't see anything to say it's going to be horrible by any means.
Yeah, I think that's good perspective. It's been seesawing kind of across the country in the sense where like if we roll all the way back to like when DARM was, um, early booking data, was pacing ahead and a pretty big percentage, but it ended up being a couple points in occupancy in early booking. Um, in most markets, as we got into Q1, uh, Q1 itself started to lag, but we still had pretty good indicators for June and July in particular across most of these kind of southern, southeastern Appalachian markets. As we've gone into spring, spring itself started to deviate, much so less so here, but definitely in areas like Florida and Texas and Alabama, they really started to fall off, but still didn't lose that pacing on the summer. And it's only been recently that we've started to see some deviations on the pacing. So I'll pull up some data in a little bit to kind of show you what's going on here, but that mixed signal of like pretty good early pacing for higher season, but then things falling off. Is kind of interesting. There's a term that I've heard from a lot of revenue managers called the missing middle, where early booking has been really strong, continues to be strong. And short-term booking, there's a lot, even though the ADR necessarily isn't where people want it to be. But there's like that missing booking window in the like 30 to 60, sometimes 30 to 90, depending on your portfolio. Is that something you guys are seeing a little bit of?
Yeah, that seems right.
I don't know what to do about that. I have a hunch. Um, it could partially be consumer driven, which is probably the case. People booking at a shorter time frame, people being a little bit more conservative. Um, I also think that part of it has to do with the what we're calling asking rates. So asking rates are like posted rates. So Wheelhouse is tracking all of the every listing in basically the world, and we're looking at the rates that are being posted on channels. And generally speaking, let me come back here to all. Generally speaking, I find that people are keeping their posted rates quite a bit higher than last year. Now, what's interesting is looking in Sevier County markets is you guys really aren't, which probably is why you haven't felt as much pressure across the spring. When we looked at Florida, when we looked at Alabama, when we looked at Texas, those people were keeping their rates at a pretty high premium over year. They were really trying to drive that rate position. And then you miss a bunch of booking, right? And I think that people have a tendency, especially in Q1, to hold that rate kind of optimistically and then react in a much shorter time period, which in a way generates that last minute booking. Now, for you guys, this is just in general, and it's just kind of showing the average rates. So what I'm looking here is at the relationships or the trends. I don't so much care what the numbers are because I'm not digging into a specific group of listings. But in general, asking rates are pretty similar and pretty stable over the last 3 years across Q1 and even Q2. Now, there is a little bit of a bump up here, it would make sense that that bump is in April. It makes sense that some of it dropped in March. Where we start to see a little bigger bumps is May, June, July. And May in particular is one that I think is a good one to look at if really from a strategy perspective, if you are holding really any increases over what you're actualizing last year, because it's not a super strong occupancy season. And then obviously anywhere that's pacing behind in the summer, that's where we start to see those kind of jump up. We probably should expect them to jump up a little bit, but that's where the room for that is going to be. And my guess is like we are in that kind of like missing middle. So if you are missing that middle or your pacing is starting to slow, looking at where those rate increases are going to be is going to be pretty important because it does look like the market is increasing a little bit year over year. What's most interesting is when we go to the high performance section, those ones that are in the top 15 to 20% of revenue listings, you actually don't see that increase. So that's kind of supports that idea is that the rest of the parts of the market that isn't doing as well as the top maybe are pushing rate a little bit too aggressively, too early. And these guys in the top performance category really are kind of much closer to what they were doing last year, at least from what they were posting, right? Which means they might be booking earlier and booking before rates start to collapse or drop in the market when people get into that 30 or even, you know, maybe as short as 14-day window. That difference, I think, is really interesting here, is that across the market, rates are higher in general for the summer. In the highest performing listings, they're much more stabilized. Still see a big jump year over year, though, or from 2023 to 2025. Okay, cool. Any questions from you guys so far, or anything you guys think is interesting or want me to kind of like focus in on?
Not for me, no.
Okay. I'm gonna just pull up this at the daily level real quick. So I do like to take a look, just a glance at it. So what I have here is I'm on just the occupancy again. I'm on the 2024 ending historicals in 2025. What is interesting to me here, I really am just trying to look at this Easter part. And when we looked at the historical, it looked like Easter and that spring break period we're pretty strong overall. We had like pretty decent occupancy in the market. I'm looking at the high performance right now, so almost sold out in the market. You have this consistent sellout in this early spring as well, and both of those kind of seem to be missing this year. This one at least. This one is not. Let me get a pen so I can draw. So a little bit of difference here. Not quite as much strength across the long-term stay. This one remained strong, and then obviously this was Easter last year, so this should be moved. Now, what I'm looking for is if this same shape, because there's obviously a longer stay here, that's where it stays pretty stable, if that's going to move over into this year's Easter. And we're getting it a little bit here. But Easter is like this weekend, and this is not quite up here. So either like this has got to jump up a ton or some of that revenue is not going to like fall across. And again, we're looking at this high performance. So we are still seeing that kind of longer term stay, but I would be a little concerned here if even in the highest performing listings, some of that didn't come in. Obviously, we're a little late now for making big changes for Easter, but you actually lose the weekday pattern completely across the entirety of the market. It's really only the high ones that made it. Something I think, you know, some of that revenue is not quite displacing. So what I'm kind of looking for here is like, is the revenue just moving? Is the occupancy just moving and we're going to make it up? Or is there also like a note of like losing some ground that's happening? I think that is also true, that not as many people are coming. Maybe that demand is a little more spread out. It kind of preps you to think about like, how do we think about May, right? If the revenue just moved, we maybe think about May as like, let's just keep doing what we're doing. If we're finding we're losing some, that starts to give you considerations of, hey, Do we need to start making some adjustments to try to get ahead of May, since that isn't traditionally as high of an occupancy even as like April and March? Do we really need to be aware of any kind of pacing differences in the summer? Because that could be the early indicator of a little bit more attrition, a little bit more pressure. Obviously, Memorial Day hasn't really started to pace above at the market level, which is interesting to me because it was definitely the highest performing spot. And we're about 6 weeks out. I would expect that to start to come together. And it looks the same as every other weekend almost. It's a little higher, but that's a little bit of a concern here. Is something to just pay attention to is, if there's a lot further to go here, we have pretty limited time. Let me pull this out a little bit longer.
Hey, John, real quick. This
Yeah.
is Matthew Kevins for you. Hey, got a question. So we don't use Wheelhouse, and just curious, where is your data just from Wheelhouse clients, or where are you getting your data from that you're presenting here?
Yeah, so we do a number of things. So this market report is a mix of kind of like all of our data sources. So we collect data from clients, and we work with some of like the largest clients in the country. We work with Stay, V-Trips. There's quite a lot of people that we work with, most of the enterprise. They feed us direct data from their PMS. And we do incorporate that into this. We also scrape every listing. And then we run the scraped listings through our version of a book blocked model and kind of an estimating model. That model is an AI machine learning model. It's been trained over the course of 10 plus years. Originally built when Wheelhouse had our own property management system, or not system, company. So really pretty good data to train that. And we do it. All the listings we have connected, we're also training the model with that data. So the way that we're estimating this is by actually watching the real reservations, that kind of thing. Final piece is we're also a data partner of key data. So we ingest the key data as well. All of that data is mixed into this. So this market report is the combination of our direct data, our key data partnership, our scrape data, how would I describe this? Like our scrape data that we've looked with our model on.
Right. Are you scraping just OTAs?
Yeah. When we do the scrape data, we're scraping Booking.com, VRBO, and Airbnb. And then the Booking.com data, even though we're scraping that, we use it a lot less. We don't do as much with it just because it's not where most people are optimizing for. A little different in like some urban environments. We'll use it a little bit more, but it's mostly the Airbnb and the VRBO in terms of the scrape stuff.
Got it. Awesome. Thank you for clarifying.
The final piece too is our direct data. We do also get their rate. So we get their direct rate back.
Yeah.
So that's kind of like scraped, but we can see if someone's posting different rates and if they're like really driving a lot at direct. Right. Perfect. Okay. So kind of interesting. This is the big question here is how is this pacing? I think that's where we'll kind of have to get. I do think it's interesting that we're not seeing spikes yet for these. And I don't know if this was the case in Gatlinburg and Sevierville County and stuff, but I felt like when I was looking at a lot of markets, I didn't see a lot of early booking pace for Easter. For the late Easter the same way. So it felt like it really wasn't appearing early. When I looked across a lot of the markets where we would expect that to drive some occupancy. And for me, I might extrapolate that where I'm not quite, maybe not out here yet, but definitely out here into maybe being a little bit more conservative about how you're pricing and trying to drive the occupancy there because we're just not quite seeing it like pop up. One quick question I have for you guys, because obviously we're talking in the middle of like a lot of financial stuff being in the news. Did you guys see any big changes to your booking pace over the last 2 weeks? Just like general sales.
I feel like I saw it slow down.
Jack?
I don't think so, actually. I know that's kind of surprising. I don't feel like I've seen it. And if it has, maybe it has a little bit, and I'm just unaware over the last 2 weeks of just a little bit of a slowdown. But It definitely hasn't gone up, but so I wouldn't say that. But yeah, I don't think it's like, slow down to the point where I'm like, oh my gosh, we're not getting any bookings or anything.
Yeah.
Yeah. I have a hunch that whenever financial news is in the markets, or like, yeah, financial news is in the news, it just kind of pauses consumer activity a little bit. Not like
Yeah.
enough to drain it, but I've seen that in some place, particularly the urban places, obviously,
Mhm.
are, they suffer from like a major drop off in sales when there's a lot of financial news. But I was just curious if that's something you guys are noticing, because I've heard mixed perspectives on it, the markets that felt like they had a really bad spring too, like part of revenue management is psychology. If you felt like you had a bad spring, you're definitely going to feel worse if you feel like it, if you think or expect it to be like lower after like different
Yeah.
things, you know.
I feel
Um,
like it probably helps that we are, more of a drive to market with a lot of different inventory too. So like,
yeah,
we might have some really nice stuff that, you charge a lot for it. And then you have some stuff that everyone can afford and they can drive 30 minutes and come to the mountains. And so it's still a little bit easier to get those people on the door.
yeah, that
Sure.
makes sense. I imagine you guys don't have much international travel, and probably not like a lot of Canadians. Because when I'm looking at this, do you do you guys do snowbirds really? Do you get a segment like that, or is this all short-term transient in January, February? Short-term transient meaning just like short stay, uh, you know, OTA direct business rather than like long stay business.
Oh yeah. I mean, that's more of what we do. I don't know what the other guys are. They might be getting more different types of guests and things, but I would say it's more that for us right now.
Yeah,
The short term. Yeah.
all short term for us as well.
Yep.
Yeah, I wouldn't expect a lot of snowbirds because like you get snow, right?
Yeah.
um, but I do know that Florida really has, I think, a big portion of where they're feeling, particularly on that Panhandle coast, because you see less of this in like Alabama, where they don't have quite the same um, Canadian travel. But if you're looking, I would definitely take a look at your international stuff. My expectation here is it's not going to be as impactful. So you probably don't have to worry about it too much. But anywhere where there is an international segment, you're probably going to need to find a replacement guest for that. Canadian travel is like for future Canadian travel is down 70%. Um, there is expectations that China will travel less. I imagine they're not coming to the middle of Tennessee. It's a long way. So you probably don't have to worry about that. But there may be markets around you that are getting that kind of travel that are actually going to suddenly become very competitive. So I think the biggest one to consider would be like Nashville. Nashville does get international travel, and they're an extremely oversupplied market. And they might be close enough to actually compete, where like if someone's pulling up, we can go to the Great Smokies, we can go to Nashville. Nashville's probably going to be like Nashville is cheaper than it's ever been over the last like basically since the 2 or 3 years from before COVID. So that could be something to consider is when you're doing direct marketing and stuff like that. Um, think about you might be competing with Nashville more than you have in the past or any other kind of city. Atlanta is another big one where there's a lot of vacation rentals in the urban market, and your consumers may be thinking about that, which is a little less obvious. I don't know what you do about it other than just being really aware of your own pacing. But even though you're not necessarily directly affected by some of these international trends, you have some markets nearby that may become very competitive to your properties. Right. Um, okay. A little bit of data I wanted to look at you guys with. So this is just a little bit more of a deep dive into specific zones. I pulled up some stuff. I can kind of show you where this is. Like right just around kind of Gatlinburg and in this area here. This is from our sets tool. So sets is not really a free tool, but part of it is free. So basically you have the capability to build market data for customized areas. So I can come into here. I can build on a map I can filter down into specific groups of listings and save that. So everything on this map is available for free. So if you wanted to poke around, you can actually see quite a lot of detail and statistics on individual listings. You can build and save the sets, but this is behind a paywall, like actually accessing the aggregates. Set stuff is pretty cool. I'm happy to, if you guys are signed up with us with a free account, we're happy to share these sets with you so that you can access all the data on them. But and then Matt, the difference with the sets data is we don't include the direct customer data here. So this is just the scrape data and the estimates on the scrape data. Since you can get down to the listing level, we don't actually include it in this data currently. And the reason I wanted to pull this up is I have the option to look at this business intelligence tool, which is pretty sweet. Just so you guys know, this business intelligence tool is actually going to be freely available for you, and you can look at your own portfolio on it. I'll cover that later, but you'll see some big announcements for us. We're giving away our business intelligence tool. But for right now, the cool thing about it is I can actually put my set data on it. So I'm looking at that set of listings I built here, which, you know, quite a big set, about 1,000 listings. And I have this set to occupancy. So these are monthly occupancies in the set. I have a little bit of highlights on the sales here. We'll come back to that. We'll look at the last week. And I'm going to pull up where this set was last year at this time. So that pacing is a big piece, right? That's kind of what I find to be the most interesting. Let's just look from April forward, April to October. Oops, that was weird. It cut off a little bit there. And this is where I think we're kind of seeing a little bit of this pacing kind of fall off here. So April's looking pretty good. We should expect it to look good. In fact, April's actually ahead this year in this set. That makes sense because we do see some Easter, but we do see a little bit of a fall off in May and a much bigger fall off in June. Now, what's interesting is if I pull off the totals, we can also see the sales pace has slowed a little bit in the last week. And it's really been in the last week that it started to slow in this set. Because if I go back 2 weeks, they're actually really similar, right? At least through June. July, a little slower. But in the last week, that slowed a little bit more. We're seeing either that means that pickup was increasing last year more than it was, or we're losing a little ground this year. But whatever the case, this gap is starting to widen here in the set. So this is a pretty broad set. We're looking at about 1,000 listings, kind of just across the general area. Something to keep in mind. Now, another cool thing about this viewpoint is we do show it at the daily level. So the daily level is a little noisy, but it does allow us to kind of look at, let me pull off the highlighted stuff. Just look at, see if there's any kind of like major dates kind of sticking out. So this is the most, how do I want to describe this? I mentioned I was a little concerned about Memorial Day. Memorial Day actually wasn't pacing very like ahead of other dates last year, so maybe you don't have to be worried at this level, right? Like that hadn't started to pick up. The only reason you might be worried about it is if you're concerned that that pace is going to start deviating more and you want to get ahead of it. But really that hadn't started to pick up last year. Same thing with, 4th of July really wasn't significantly different from other dates around it last year. And in general, the trend here is pretty similar. So, we're probably going to have to expect a much higher pickup here. We don't want that to deviate too much, but the overall kind of like way the booking window is working is looking pretty similar this year to last year, even though we're just a little bit lower. Now, what's interesting in this set is how much more occupancy is occurring in April compared to last year. That's a good thing. It's probably making up quite a bit. We also saw that March didn't lose quite as much ground, but in general, some of the concerns I was looking at the top level, a little less concerned about, particularly here. I think the biggest concern for me would be at the set level, and let me move this back to the monthly. Seeing this deviation starting to appear in May and seeing it in June, that would be the one to keep an eye on. And really, you're just comparing to your own pace. If you're not seeing it in your own portfolio, you probably don't have to be worried. It does give you the idea that, though, you may want to be a little more conservative earlier, because if other people are pacing poorly, and you're not, that means they're probably pacing even worse than the average. And they're gonna like that. You got to be aware of when they really are gonna like collapse the rate, because you want to try to fill before the rate collapses in the market around you, right? And it may not do it because this isn't down a ton, right? We're not pacing super poorly. And up until about 2 weeks ago, or up until, 2 weeks ago, the pacing was really similar in terms of how much was actually being sold. So, it could be that just right now it's slowing and it'll pick back up. If that maintains its slowness for a couple weeks, then maybe we'll want to make some adjustments early. If you guys are using Wheelhouse, this is just a minor thing, this is Wheelhouse call. You can pull this data up against your own portfolio. So you can go through any list of your own listings and dig in, which is pretty neat. You can actually also add the sets data or the last year data. It's pretty cool. And just a little reminder, you'll hear about this in a couple weeks, but this is actually freely available right now for your own portfolio. So if you link your account, you can access all this data. We'd be happy to talk you through how to utilize it for your own business intelligence. All right, I got another set here. And this is really just around this like Pigeon Forge. I don't know if I'm choosing the right spots for you. We can pull up another one if you like and build it. This is another about 1,200 listings, so pretty big set. Both of these sets are all bedroom counts, so while I can see rate averages here, I'm not using it too much, if that makes sense. And they're all listings that had at least 60% occupancy last year, so I'm trying to filter out the lowest performing listings in the group. And when we pull this one up, my guess is we're going to probably see a pretty similar pattern here. Yep, a little bit higher in April. The Pigeon Forge area is not pacing behind as much in May, is like a little further south in Gatlinburg. And then we're still seeing a little bit of this loss in June and into July. Pretty similar. 2 weeks ago. Not quite as much change this week, though. So some slight differences here. The Gatlinburg set losing a little bit more ground in the last week. This set, which is a little bit north, not losing much ground between last week and 2 weeks ago. So just glancing at the daily level, again, same trends. Probably expect a similar. Not seeing Memorial Day really pick up last year, so not picking up this year. A lot of strength here in early April, and then 4th of July also not kind of peaking up over last year. So I think what you guys were talking about early on is supported by the data. Like there's some strength and kind of like stabilized earlier in the year. The booking pace, while losing a little bit of ground, still seems pretty stable. And so there's probably not a reason to panic. And really, it just comes down to really closely monitoring the pickup and maybe considering being a little more conservative if you expect things are going to get a little worse. But in general, the market still seems pretty stable here. So you guys don't have to be panicking like some of the people are doing in Florida. Any specific spot you would like me to dig in on or kind of look at with you guys? We could build a set real quick if you wanted me to look at a specific area that wasn't in like these areas. No. We could also look at a specific property type if you want to. Or if you guys had any questions for me, happy to kind of talk through like a strategy thing you're thinking or kind of what you're talking about. Otherwise, might be able to give you your time back if you like.
John, I thought this was very helpful.
Good.
Yeah, thank you for doing this. It's extremely helpful to get your perspective on and look at future stuff. I appreciate also the question that you guys asked over there at Cabins for You about the data. It was helpful to understand where it's coming from.
I think the thing that really stood out to me was the change in the booking pace in the last 2 weeks. That'll be cause for pause for us just to keep an eye on that trend. But that was really good data, John.
Awesome. Yeah, we'll probably be doing this periodically, so we'll come back to Sevierville County. My guess would be probably towards the end of the summer, because I know you guys get a good bump for the fall, so I'd like to hit that around the time that you should be in the booking window for that. And then if you guys have any questions or ever want to look at some data, let us know. Also, if you'd like to talk about using some of these tools, we're happy to talk to you about that. Some of these are free. Obviously, I mentioned, we didn't talk about it here because we're looking at market data, but if you have your own portfolio here, you can also watch your own sales pace. So there's a lot of options here that make it really easy to access. That's going to be free. We also we do pricing. We have market data. So a lot of options there if you guys are looking once you get out of high season.
Cool.
Yeah,
Well,
sweet.
appreciate it. Thank you.
Awesome,
Yeah,
guys.
thank you, John.
Appreciate your time. And if you think of a question afterwards, feel free to shoot me a message. I'm happy to give you my honest opinion.
Thanks, John.
Thank you, John.
Thanks,
you.
John.
Thanks, guys.
Yeah.
Have a great rest of your week.
You too. Bye.